Welcome to the Single Source podcast, featuring fund managers at the forefront of private markets.
Let's start with CBAM Bitcoin Yield Fund. Anthony, please tell me a little bit about the strategy behind the fund. Why now? Why tokenize? Tell me about it.
Yeah. So the first thing that you should know and investors should know is that Bitcoin has a role in your portfolio. We find that most investors who are coming in to the space want to put maybe 1 to 5% in allocation into Bitcoin. So it brings them diversification and it brings them a new orthogonal source of return that offsets other parts of the portfolio. Second, the Bitcoin yield strategy, it seeks to outperform Bitcoin. And so a lot of investors who already have exposure to the beta of Bitcoin, they want to do a little bit better. And so they want to have the instrument itself, Bitcoin, which is a digital commodity, produce income. They want it to have a yield. They want to be able to underwrite it with a yield and a managed strategy on top of that. So that's what we do with the Bitcoin yield strategy. It's an all-weather strategy. So whether Bitcoin's up or down, we seek to add more Bitcoin to the portfolio over time.
How does that work, though? In theory, it sounds great, but tell me, how does it actually work in terms of when you're dialing up and dialing down? When does that happen?
Yeah. So Bitcoin's a digital commodity, and because of the properties of Bitcoin, it's transferable, it's composable, it's divisible. It's a wonderful collateral asset that you can hold in different ways. Now, that allows us to participate in different markets with that collateral instrument. So we can use Bitcoin as collateral to arbitrage new markets. We can engage in things like cash and carry, where we borrow dollars against the Bitcoin at one rate, a low rate, and then we reinvest those dollars at a higher rate.
That's really interesting because I don't think anybody's doing that. I don't know if you're the first, but definitely one of the pioneers to use Bitcoin in that strategic way. Why tokenize, though? If you're talking to traditional fund managers or LPs, allocators that are used to investing in traditional funds, why tokenize?
Yeah, it's an interesting question, and you have to understand the way the market structure has taken shape. So today, there are over 400 or 500 million people around the world who hold crypto. And that means that they have digital wallets. And they are continuing to bring more of their wealth into that digital wallet. And therefore, they want strategies to be delivered to them in a way that they're used to. They're probably not going to go back to a traditional bank or traditional brokerage who can't support crypto. So now what we're doing is we're wrapping these managed strategies in a format that's comfortable to them. And this is important because we take a digital asset which runs on blockchain rails, we wrap it in the legal construct and safety and security of traditional market
funds. Important.
And then we wrap that in the blockchain technology itself. So we can deliver the same managed fund solution to a digitally native client.
So to ease any investors' concerns about potential risk associated, like what is the biggest challenge or risk you think to convince that traditional allocator invest in the Bitcoin Yield Fund?
Well, so there are different underwriting elements to that. So the traditional allocator first has to underwrite that they want Bitcoin in their portfolio or not. And so once you've gotten over that hump and you've said, okay, I understand how this product works, this asset class works, I want that exposure. Then you have to go through the what's the best way to get exposure conversation. And for the tokenized fund, that serves clients who have a wallet, are already familiar with digital asset market structure, and understand that they can access the fund in a tokenized format. For many other investors who just aren't there yet, which is most traditional institutional investors to this day, they're probably going to want the exposure, but not the tokenized fund format. So the really good news is this is mostly behind the scenes infrastructure. The tokenized format is no different than us saying it's an ETF or a mutual fund or some other type of instrument that wraps an underlying strategy. The tokenized format is simply the technology layer around the legal construct of the fund. And most investors may not even know there's a token.
You don't even know.
It'll be integrated into your platform when you go and you buy something, a traditional private market fund or a crypto fund. Like the wrapper around it may be tokenized, but for your user experience isn't going to change. It's going to be accessible to you. Now, what they're going to notice is they're going to notice improvements in liquidity. They're going to notice improvements in subscription and redemption timing. They're going to notice improvements in transferability. And they're also, importantly, going to be able to move that instrument from one account to another account or one wallet to another wallet. And that's where the real power comes in.
Thanks for listening. For more, visit apexinvest.io.